It's Thursday, April 30th, 2026. You're listening to the DX Today AI Daily Brief. Today, an unprecedented big tech earnings night reshapes the AI compute map, with Microsoft, Meta, and Alphabet committing nearly $600 billion in combined capital spending for 2026. A wave of category-defining funding rounds lands on a single Wednesday. And Cognizant makes a $600 million bet on the data centers that power it all. Let's get into it.
Microsoft reported its fiscal third quarter on Wednesday, with revenue of $82.9 billion, an 18% jump that comfortably beat Wall Street estimates. The headline number for AI watchers, Microsoft's annualized AI business, now stands at $37 billion, up 123% year over year. Azure revenue grew 40%. The company confirmed 20 million paid Microsoft 365 Copilot seats and disclosed that capital expenditures will reach $190 billion this calendar year, including roughly $25 billion in elevated component costs. Microsoft also formally restructured its OpenAI agreement, ending its revenue share and clearing the way for OpenAI models to live on rival clouds.
Down the road in Mountain View,
Alphabet posted a blockbuster quarter Wednesday with first quarter revenue of $109.9 billion, up 22% year over year. Net income reached $62.58 billion. Google Cloud was the standout, growing 63% to $20 billion for the quarter, with backlog nearly doubling sequentially to over $460 billion. Chief Executive Sundar Pichai called this the company's strongest consumer AI quarter ever, driven by the Gemini app, while paid Gemini Enterprise users jumped 40% quarter over quarter. Alphabet also raised its 2026 capital expenditure guidance to between $180 and $190 billion and signaled spending will increase significantly again in 2027.
Now to Meta.
Meta delivered a top and bottom line beat Wednesday, with first quarter revenue of $56.31 billion, up 33% year over year, and net income of $26.8 billion. Adjusted earnings per share came in at $7.31, but shares fell roughly 6% after hours as investors digested a sharply higher capital spending plan. Meta lifted its full-year CapEx guidance to between $125 and $145 billion, up $10 billion at both ends. The company also confirmed an 8,000-person workforce reduction beginning May 20th and the cancellation of 6,000 open roles, as it reorganizes around Chief AI Officer Alexander Wong's Superintelligence Labs.
To finance now.
New York-based Rogo announced a $160 million Series D Wednesday, led by Kleiner Perkins, with participation from Sequoia, Thrive Capital, Khosla Ventures, JP Morgan Growth Equity Partners, Box Group, and Jack Altman. The round brings total funding past $300 million. Rogo builds an agentic AI platform purpose-built for finance, used by more than 35,000 professionals at the world's top investment banks, private equity firms, and asset managers. The company recently introduced Felix, an agent that executes complex multi-step financial workflows autonomously, from deal screening and confidential information memorandum generation to buyer outreach and data room diligence. The new capital funds global expansion and deeper ties with major financial institutions.
Clinical AI. Next.
Clinical AI provider iDoc closed a $150 million Series E on Wednesday, led by growth equity at Goldman Sachs Alternatives, with participation from General Catalyst, SoftBank Investment Advisors, and NVIDIA's venture arm nVentures. Total funding now exceeds $500 million. iDoc's foundation models analyze more than 60 million patient cases annually, with deployments across nearly 2,000 hospitals globally. The company says the round will accelerate expansion of its enterprise AI platform and clinical foundation model, which earlier this year secured a first-of-its-kind FDA clearance for a comprehensive foundation model-based imaging triage system. The funding signals continued investor appetite for vertical AI anchored in regulated high-stakes clinical workflows.
Now to defense tech.
California-based Scout AI announced a $100 million Series A on Wednesday, the largest defense tech Series A in U.S. history, co-led by Align Ventures and Draper Associates. Other participants include Booz Allen Ventures, Decisive Point, and Disruptive Founders Fund. The startup is building Fury, a foundation model designed to serve as the decision-making layer for unmanned warfare. Fury allows command and control systems to coordinate fleets of autonomous platforms across air, land, sea, and space, rather than relying on one-to-one human oversight. In its first year, Scout booked $11 million in Department of War contracts, unveiled an autonomous vehicle orchestrator called OX, and demonstrated a fully autonomous strike mission carried out end-to-end by AI agents.
On to consumer marketing.
Marketing data platform Hightouch raised $150 million Wednesday in a Series D at a $2.75 billion valuation, led by Goldman Sachs Growth Equity and Bain Capital Ventures, with participation from Iconic Capital, Sapphire Ventures, Amplify Partners, and the Trade Desk's venture arm. The valuation is more than double Hightouch's $1.2 billion mark from early 2025. The round funds expansion of Hightouch's campaign orchestration, decisioning, and cross-channel automation capabilities, all aimed at letting marketing teams deploy autonomous AI agents that act on customer data in real time. The deal continues a Wednesday trend of mega rounds in vertical agent-native AI platforms.
Across the Atlantic now.
Berlin-based Spread AI closed a $30 million Series B Wednesday to scale its industrial decision intelligence platform across global manufacturing. New investors include OTB Ventures, IQT, Salesforce Ventures, DTCP Growth, and Thesiger Capital, alongside existing backers HV Capital and Nada Capital. Spread's platform unifies complex engineering and product data across enterprises and is deployed by more than 100 manufacturers, including Volkswagen, BMW, and Rheinmetall. Customers report development cycles accelerated by up to 30%. The funding will drive U.S. and broader international expansion, an effort that fits Europe's growing push for industrial AI sovereignty in defense, automotive, and aerospace, where supply chain data control has become a strategic priority.
Next, infrastructure services.
Cognizant said, Wednesday it has agreed to acquire San Jose-based Astrea for about $600 million, deepening its AI infrastructure and data center services. Astrea manages technology environments for hyperscaler clients, supports nearly 30% of the world's data centers, and serves more than 500,000 end users. The deal advances Cognizant's transformation into what it calls an AI builder, expanding capabilities across AI lab environments, enterprise networks, and workplace technology. The acquisition is expected to close in the second quarter, subject to regulatory approval. Cognizant cited a projected $6.7 trillion global AI data center build-out between 2025 and 2030 as the strategic backdrop.
Now to enterprise productivity.
AWS used its What's Next with AWS event Wednesday to launch Amazon Quick, a desktop AI assistant that connects to local files, calendar, communications, and a long list of third-party apps including Google Workspace, Zoom, Microsoft Teams, Dropbox, and Airtable. New free and plus pricing plans let users sign up using any major identity provider. No AWS account required. Quick now generates polished documents, presentations, and infographics directly from chat. AWS also expanded Amazon Connect into 4 agentic AI solutions covering supply chain, hiring, customer experience, and healthcare, signaling a sharper competitive push against Microsoft Copilot and Google's Gemini Enterprise platform.
Now to London.
The UK government announced Wednesday that its sovereign AI fund is backing Ineffable Intelligence, a London-based startup developing a frontier AI system designed to learn for itself and discover new knowledge, rather than simply pattern matching across human-generated data. The investment is co-led by the British Business Bank and signals Britain's intent to keep promising frontier labs domiciled at home. Ineffable joins a growing portfolio of sovereign AI recipients, all selected as part of a national strategy to anchor compute, talent, and intellectual property within the United Kingdom. Officials frame the move as a counterweight to U.S. and Chinese dominance in foundation model research and commercialization.
Finally, customer experience.
South Korea-based DeepBrain AI announced Wednesday the launch of real-time interactive AI avatar agents for enterprise customer experience. The avatars hold live conversations on device in over 150 languages with culturally tuned voice delivery and run on a model-agnostic architecture that connects to commercial, open-source, or in-house language models. DeepBrain says it already supports more than 100 enterprise AI agent deployments across banking, retail, healthcare, and public services. The release combines a low-latency generative engine with natural lip sync, positioning the company as a direct competitor to Synthesia and HeyGen in the rapidly maturing market for synthetic, conversational frontline workers.
That's your briefing for Thursday, April 30th, 2026. For DX Today, stay curious.